Another steady day of trade with the Nifty holding firm above the 26,100 mark while broad indices lag. IT gives up previous sessions gains and PSU banks see some pressure. Financial services, metals, energy lend support.
IDBI Bank stake sale is moving into the final stretch. Sources say the government may invite financial bids within the next 15 days with the divestment mechanism already cleared. And the RBI has granted fit and proper approval and the Home Ministry has given security clearance to shortlisted bidders.
Ambuja Cement is soaring after a nod to merge ACC and Orient Cement into itself, creating a single consolidated cement platform. Management sees synergies from manufacturing and logistics, lifting margins by at least 100 rupees per ton.
More buzzers today. RITES jumps 3% after bagging a 300 crore rupees international locomotive order from South Africa. Antony Waste spikes as its arm wins a 330 crore rupees solid waste processing project from Thane Municipal Corporation. GPT Infra project also abuzz after emerging L1 bidder for a 670 crore rupees NHAI elevated road project in Jodhpur.
Tula Investment has issued a strong clarification calling recent allegations malicious and baseless, reaffirming robust asset quality, liquidity and unchanged guidance. Meanwhile, Bellrise Industries jump after a block deal where the promoter group sold 7% stake for about 900 crores.
Hi there, very good afternoon, good morning. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka and Kavita. And this is a show where we'll answer all your stock-specific queries with our experts. But before we get started, a quick look at how the markets are shaping up. Well, it's a very steady day coming in, absolutely flat but yet steady. As far as the Nifty is concerned, we are managing to hold on to that shade of green, just up about 11 points or so, 26,183. That's the level where we are trading at, close to the day's highest point. But yes, steady day of trade coming in. If you talk about Bank Nifty, that's also trading absolutely flat, but yes, holding on to that shade of green, holding on to those levels that we had yesterday, 59,300. That's where it's trading currently. So yes, good day over there as well. If we talk about some of the top gainers on the Nifty today, it's likes of Coal India, Shriram Finance, Ultratech, Power Grid. All of these are the stocks that are powering the Nifty's rally ahead. They are managing, the green upside for Nifty. If you talk about losers, Infosys, Bharti Airtel, TCS, Max Health, these are all the losers on the Nifty and limiting the upside as far as the Nifty is concerned. If you talk about the NSE advance decline ratio, that however is currently in the favor of advances. So yes, Kavita, looks like a good day coming in. Not Absolutely. Many major gains, but yes, managing steady on the indices front at least.
Absolutely. And so let's begin. Buy now, sell now, and we focus on your stock-specific questions. Just in case you want to send across any query, the WhatsApp number is flashing on the screen. Note that down. Write the name of the stock, the price at which you bought it, and the timeline you want to hold on to that particular counter. We will give you a technical as well as a fundamental view. That's a number flashing on the screen. And also, if you are a South India viewer, be it Bangalore, Hyderabad, or any other part of South India, we have a South special also going on Buy Now, Sell Now, and where we focus on South India viewer queries and get you live recommendation from our experts. And today joining us as expert is Rajesh Agrawal, Head of Research, AUM Capital. Rajesh, hi. Morning and welcome to the show. We have our viewers connected live as well. We have Satya Vaini from Hyderabad connected. Satya, hi. Morning. How are you?
Good morning. Good morning, Ji.
Hi.
Very good morning.
Good morning.
Kavita Ji and Kanishka Sarkar Ji and Rajesh Agrawal Ji. Very good morning. I am holding BSU shares 190 numbers at 2810.
Okay.
And the CDSL 18 shares at 1880.
Okay.
At what price can I average it? Please kindly guide, please. I am in loss.
Sure. You want to know the average level. And you plan to hold it for some time now?
Yes. I will hold. I can hold up to 1 year.
1 year. All right. Let's get you the recommendation and the strategy. Rajesh, BSE and CDSL, 2890 is BSE and CDSL is 1880.
Good morning, Kavita. Good morning, Kanishka. Good morning, Mr. Vaini. As far as CDSL and BSE are concerned, both have been our buy calls from since very long period of time. As far as I remember, BSE, we have been giving Camboros buy at 500 odd rupees. That's basically 150 odd rupees. It's already a 20 baggers. But still, we are very bullish on that based on the fact that the numbers have been pretty good in the last 2-3 quarters. And they have been gaining market share in FNO, strong balance sheet, their holdings in CDSL. So everything is in their favor. And the best part is the only listed equity stock exchange at this point of time. So we are very bullish on BSE for these reasons. As far as CDSL is concerned, one of the largest depository in India. And with insurance also coming in into depository, I think the business is going to go up. And not to forget the kind of new IPOs coming in and the second half of next 6 months of this coming year. I think there are a huge lineup of IPOs coming in. So not only demat fees, but the listing fees and the corporate actions fees all are coming into it. So both are fundamentally very strong stock for holding for a long period of time. And as far as the question of averaging is concerned, I would suggest that unless there is a gap of 10-15% from your buy price, no point in averaging because there won't be any average as such. So if you are looking for a long-term horizon, wait for some correction to enter, or you can add at these levels too. We are very bullish on this. BSE, in the short term, it can move up to 3,000 odd levels. So when it crosses its 52-week high, that's all-time high. Then newer highs may be there. So one can add.
Okay, so you could look at adding more. That's the fundamental and long-term view coming in on BSE and CDSL. But we also have Aditya Agarwala, the head of research and investments from Invest for Edu, joining us. Hi, Aditya, for joining us today. And on the back of technicals, also we'll want a view here on BSE and CDSL. The viewer has 190 shares of BSE at a price of 2890 and about 90 shares of CDSL at a price of 1880. While Rajesh has already shared the fundamental view with us, what is your technical view? Any short-term targets that we could look at? The viewer has been sitting with some bit of loss. So what are your suggestions as far as the technical charts are concerned?
Good morning. Thanks for having the show. Let's talk about BSE first, and I concur with Rajesh's view that this is one of the only listed exchanges for equity in the markets currently. And we have seen the kind of up move that the stock has posted. Recent correction, if anything, provides an excellent opportunity to add more into the stock if one wants to add. The viewer is also looking to average the stock. So BSE still continues to look extremely bullish to me on the chart setup. We have a target of 3,000 plus. On the stock, the first target is 3,000. Once it crosses 3,000, the next target is 3,200 on BSE. So the viewer can actually go ahead and average BSE at current levels, place a stop loss somewhere around 2,600 on the downside and look for a target of between 3,000 to 3,200 from a medium to slightly longer term time frame if he has a view of 1 year and maybe slightly beyond that. Talking of CDSL, this too looks interesting after a correction. Stock entered into a sideways consolidation and now offers an excellent risk to reward again at current level. So can look at continue to holding on to the stock for a target of 1850 on the upside as far as CDSL is concerned. As far as averaging out is concerned, can consider doing that given the correction has already played out in CDSL and from here stock can see higher levels. So can look at averaging with a stop loss on the downside closer to about 1400 and look for a target of 1850 on the upside.
That's a take on BSE and CDSL from both our experts. All the best, Satya. But then let's move on. And this question is from Mr. Balaji from Chennai. And BLS International, he bought almost at 365. He wants to know if it's the time to hold or maybe book some loss. He wants to be in this for a year almost. Rajesh, any specific recommendation and the timeline, maybe if you want to comment on that?
This is one of the largest visa processing company in the country and doing very well. But last 1 or 2 quarters, the numbers have been not that good and there have been negative news flows concerning this company. At this point of time, I won't recommend adding to it. But one can continue to hold for maybe a target of 350, 360 odd rupees in the next 2 quarters. Or if by any chance it falls to 290, 300 odd levels, there at those levels one can even add.
So we want BLS International, but let's move on and get another stock query answered. So now this one is coming from Bharatwaj, writing from Coimbatore. He wants to know whether he can buy CG Power at the current price. He's looking for a long-term investment, Rajesh, of about 3 to 4 years. And if not CG Power, he is looking at something in the semiconductor space. So any other picks that you would like to suggest?
Basically, it's, very few companies in the semiconductor space. One of them is CG Power, the other one is Keynes. Then there is Tube Investment doing something into semiconductor space too. So I think it's better to go for either CG Power or Tube Investment for a long-term horizon. But at this point of time, I think both are fully valued for. So nothing much can be expected in the short term. Of course, if the market helps, that's another point. But fundamentally, I think they are fairly valued. Wait for some correction to enter in CG Power or a Tube Investment.
The time frame that you mentioned, CG Power, Tube Investment, are the recommendation from Rajesh. Aditya, this question is on JSW Holdings. This is Mr. Ravi Raji, and he wants to know if he can hold it for more 6 months. He is holding 100 odd quantity.
Morning, Kavita. Definitely, I think so. He can continue to hold on to the share. Like I mentioned, stock formed a double bottom recently, and from there it's bouncing off. So on the downside, immediate supports are close to about 19,600, 19,700. On the upside, the immediate targets are 22,500. So the first target that I'm playing for is 22,400. Once that is taken out, stock can test levels of 24,000 as well on the upside. So continue to hold, place a stop loss just below 20,000, maybe closer to about 19,500, 600. And on the upside, look for a target of 22,500 and then 24,000. The momentum hasn't started off yet in the stock, but soon I think stock will see much higher levels from currently zone.
Okay, so that's the view on JSW Holdings. But let's move on and have another query answered. A Kambaria from Hyderabad has written to us. They've been holding 50 shares of PNB Housing. Their stock price, holding price is 782 rupees. Aditya, they want to know whether they should hold or book their profits. And if they do book their profits, they're looking to make an investment in BEL or HAL, defense names. What would you suggest? What is the strategy that they should adopt?
So it's a completely different sector that they are looking to switch to, migrate to. If you're looking to switch from a PNB Housing Finance maybe to a defense, yes, it makes sense because we've seen defense underperform for some time now, and cyclical trends do suggest that just before budget, these sectors tend to outperform. Defense being one of them, and because of its own problems, we have seen PNB Housing Finance see that kind of sharp correction, and now it has recovered some bit. But my sense is if they're looking to switch from PNB Housing Finance to a defense name, definitely one should go ahead and do that. HAL is a good stock to look at current levels after a bit of a correction and a cool off. The risk to reward is in favor of going long in HAL at current levels. So one can definitely look at initiating a fresh long trade here. Place a stop loss somewhere around 20 to 4,200 on the downside and look for a target of 4,800 on the upside. So 4,800 target, 4,200 stop loss can make a switch from PNB to an HAL.
All right, a switch recommended to HL. But then let's move on. And Rajesh, this is a question from our viewer Ignatius, and he's from Kolkata. He bought 70 stocks of CAMS at 758, and he can hold it for almost 2 years.
Continue to hold, I would say, and if by any chance it falls from a CMP around 5-7%, one can even add. Company is doing very well, one of the biggest R&D in the country. Mutual fund business as such is doing well. We have seen SIPs increasing month on month, and that's a good sign for companies like CAMS or KFintech of these sorts. So it's a hold from a side at this point of time. At around 720, 730 odd levels, one can even add.
So that's the view on CAMS. Thanks, Rajesh, for that view. Our next query is coming from Satya. He has also sent his wishes for Christmas. So a Merry Christmas to you as well, Satya, from the entire team at ET Now. And his query is for both a technical and fundamental pick. What he's looking at. Aditya, let me start with you. He's asking 2 picks for deploying for a 1 month or 2 month period. So which are your top picks? Which are the best charts that you're spotting right now? And Rajesh, then we'll come to you for one value pick for a period of 12 to 18 months.
So I'll stick to large cap names because clearly we have seen volatility kicking into the market. And as we head into New Year's, the volatility will accentuate further. So I'm looking at something like an FMCG staples or maybe from something from the consumer staples which looks interesting. So Varun Beverage is something which is looking interesting to me at current levels. One can actually go ahead and buy the stock, given the fact that stock has already corrected, offers an excellent risk to reward at current levels. So Varun Beverage is one which is looking interesting, can be bought at current levels with a stop loss somewhere around 450 on the downside, and for a target of 580 to about 600 on the upside. The second stock is from the two-wheeler space. Bajaj Auto is something which has really been lagging within the entire auto space, and now it's finally showing some signs of an up move. So Bajaj Auto is also on my radar purely for the fact that it hasn't moved yet, and then we have seen the entire two-wheeler pack almost touch new all-time highs. So at current levels, I would recommend a long on Bajaj Auto as well for a target of 10,500 on the upside, and place a stop loss somewhere around 8,700 on the downside. So Bajaj Auto and Varun Beverage, these are two top picks from my side for at least a couple of months.
Okay, so Varun Beverages and Bajaj Auto, those are Aditya's picks for the next 1 or 2 months. But moving on, Rajesh, what would your value pick be for a period of 12 to 18 months?
See, 12 to 18 months, we are very bullish on Reliance. You look at the company's structure, the OTC business is doing very well. View has got higher IPO. They're going for tariff hikes too, as the media news is there. Retail having 19,000 plus stores with them. And it's just a matter of time when some big corporate action takes place. So numbers are also good, balance sheet is good, corporate action is awaited. I think this can be a good long-term play at this point of time. Like to add one more from the auto space, like that's Hyundai. So that's a market leader in CV space, SUV space, I would say. Creta has been ruling the roads from the last since its launch. Even EV Creta has been taken very well. They're going for capex, and that too from the entire internal accruals. I would say they're more focusing on exports market. So these are two picks from our side from the next 12 to 18 months.
Right, so these are the value pick slash Santa picks, if we can call them that. But then, yeah, more expert picks coming up after this break. And also, you can send across your questions. The numbers flashing on the screen. See you after this break. Welcome back. You're watching Buy Now, Sell Now, and we are answering your stock-specific queries. And Aditya Agrawala and Rajesh Agrawal, our experts, are connected live. And we also have a viewer live connected with us, Mr. Ravi. Ravi, hi, morning. How are you? You're calling from?
Hi, madam. Good morning, madam.
Hi.
I'm fine, madam. Actually, I bought 400 shares of Infosys
Okay.
at 1707.
Okay.
Actually, now it is 1671. Shall I hold it for a long period or shall I sell it? I want to know, madam. Actually,
So you want to decide the time duration?
yeah, it's under loss. Actually, shall I wait for some more time? That's
Sure.
what I want to know.
All right. Rajesh, any specific recommendation in terms of target? Let's ask both the views, in fact. Rajesh, starting with you.
See, Kavita, we are very bullish on IT space as said just because of the numbers, the valuations at this point of time, because in the last 2, 3 quarters or so, the environment has become such that IT companies are not going to do anything and the valuation have corrected quite a lot. At this point of time, they have strong balance sheet. The order book has been decent, I would say. They are moving into cloud, ML, other things too. So I think it's a buy from our side. Uh, Depending on your time horizon, you have to take a call because if it's a very short term trade, then you have to keep stop losses and all. Else, for a long term horizon, if somebody looking for 12 to 18 months, I think it's time we start nibbling on large cap IT names, at least like Infosys, TCS.
Right, 12 to 18 months a time frame from Rajesh. And Aditya, any specific target that you recommend him to hold on to?
I think stock eventually will scale past its previous all-time high, which is closer to about 2000, 2050 odd levels. I don't see any reason to just exit from the stock because it has underperformed for some time now. And usually when the chips are down, that is the best time to look at any sector. So we believe it's the best time to actually stay invested in an IT company, and no better stocks than an Infosys, a large cap IT name, a giant. Though there could be some bit of volatility here and there, but I don't think so. One should be disturbed. stay invested for at least 1.5, 2 years, and you will see decent upside in all of these IT names. If anything, I would recommend you can look at averaging also at current levels. Look for a stop loss somewhere around 1550, 1600 on the downside. And from medium to longer term time frame, you can see levels of 2000 plus on an Infosys.
All right, so that's the technical view on Infosys. Good hold for a long term, and it is likely to scale past its previous high. That's the word coming from Aditya. But let's move on to our next query, and this one is coming from Bala Chennai, who's written to us from Chennai. Rajesh, he says that he really likes your recommendations, and this one is also for you. He's asking Amara Raja and Transrail Lighting. Are these good buy at the current prices? What would you suggest as fundamental strong enough if one starts to enters these stocks at the current levels? Are the fundamentals strong to hold on to them for a longer time?
Thank you, Mr. Bala, for kind words. Uh, both the companies are good for long-term horizon. Taking one by time, Amara Raja is doing very well in the OEM space and replacement market too. The kind of numbers which we are seeing in auto, I think this is going to perpetuate in auto players like Amara Raja. So going forward, I think at least 15 to 20% upside from the current level in the next 12 to 18 months is quite possible. As far as Transrail is concerned, their order book is very strong. They're doing very well. Even the valuations are on a very comfortable level. I think 700 target would be a decent target for next 1 year. So both are a buy from our side.
All right, that's the take coming in. Aditya, would you want to give a take on this?
So Transrail is somewhat coming under a bit of a flake and then some bit of selling pressure. There were some triggers also highlighted on the concerns of management, which is why we had seen that kind of sell-off. Going purely by the technical setup, stock is slightly in some bit of a turmoil. I don't see any immediate upside in the stock, but yes, risk to reward is in favor of staying put in the stock at current levels. On the downside, 560 is a good support area. On the upside, slowly and gradually, stock can test levels of 700, the level that Rajesh was also suggesting, but it will take some time for the stock to reach there. So Transrail is decent enough to continue to hold. I would not recommend adding on to it at current levels. Amar Raja, on the flip side, we have seen a massive correction after that sharp up move and now offers an excellent risk to reward. So this is something that the viewer can look at averaging somewhat at current levels if he's looking to average for a target of 1200 towards 1300 on the upside. On the downside, 880, 860 is a good support zone.
All right, so that's the technical check as far as Amara Raja and Transrail Lighting are concerned. Thanks, Aditya, for that. But let's move on and get another query answered. Now, we are, officially entering the holiday season, and this one has come on a travel booking platform. This question is for Chandrasekhar has sent it from Chennai, and it's for Thomas Cook. He has 1,000 shares with an average price of 230 rupees. He's saying that he can hold on to it for a period of about 6 months. Aditya, should he average at the current price or sell and book some loss? What would you suggest?
Can stay invested for some more time, maybe from a very short-term time horizon. Stock can see some bit of an upside, but not too bullish in the stock. So wouldn't recommend staying invested for too long. Maybe for a maximum target of 165 to 170 on the upside, and then maybe revisit once stock reaches closer to about 170. Because I don't see any immediate trend in Thomas Cook. There are better plays if you're wanting to play travel as a space. You can look at a stock like a Yatra or maybe a TBO Tech or even an Indigo at current levels after a bit of a correction because of its own reasons, offers better risk to reward. So these three stocks are better as compared to Thomas Cook at current levels. So if you're looking to play out the travel space, maybe exit from Thomas Cook and look at these three stocks, a Yatra, TBO Tech, or maybe an Indigo as well.
All right, so that's a name you can look at in that particular space. But then there's a long-term question on Dixon and Sirma SGS and also Keynes Technology. This is Swati who's asking if it is advisable to initiate a buy in these particular counters. Rajesh.
All these companies are doing very well. Strong order book, PLI helping them, government focus on indigenization is helping them. But the fact remains the valuations are very stretched. Many of these companies are trading at 3-digit P. That's not comfortable at all. So I won't. I would say avoid at this point of time. The only comfort is coming from Sirma SGS. So if somebody is taking to take some risk, is going for Sirma SGS. Otherwise, wait for some more correction to creep in after in this sector.
Aditya, any specific take on these counters? And also, if one has to initiate a buy, what would be the recommended levels in all of these three?
So let's talk about Sirma first. And I think I agree with Rajesh. After a decent bit of a correction, Sirma looks slightly better off as compared to the other two names. Excellent risk to reward again has come to a good support zone of 700. Keeping that as a stop loss, one can actually look at initiating a fresh long here for a target of 800. Mind you, these stocks have run up extremely sharp up moves we had seen in these stocks, and now they have come under some bit of a selling pressure because of their over valuation and all of that stuff. But now I think so looks good to add the stocks. So Sirma is one of the top looking stocks between these. Talking of Dixon, I think Dixon can see some bit of sideways activity, if not immediate price action. So it can come under some bit of a time-wise correction. I don't see any immediate upside in the stock. So maybe give it some more time for the stock to cool off. Closer to about 12,000 or 11,500 is something that I'm looking at adding onto the stock. It will go under some bit of a time correction. Same holds true with Keynes Technologies. I believe we had seen extremely high volume backed selling in the stock. So it will take some time before the stock actually starts to go up. On the downside, 3,800 is a decent support zone. On the upside, 4,300, 4,400 is a resistance zone. It will take some time for the stock to consolidate in this zone and then maybe see show an up move. So within all three names, maybe Sirma is the one that she can look at, and then followed by Keynes and then Dixon.
All right, so that's the pecking order. Sirma, Keynes, and then Dixon Tech. Thanks, Aditya, for that view. On that note, we'll let you go. Thank you so much for helping us with your tech picks for today. All right, with that, time now to slip into a very short break. We'll be right back to answer more of your queries on the other side. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now. This is a show where we are answering all your stock-specific queries, and we still have Rajesh with us to answer all your fundamental queries. And on the technicals, we are now joined by Ajit Mishra, the SVP Research at Religare Broking. Hi Ajit, good morning to you as well. So let's get back to all the queries then. Now this one is coming from K. Parthasati, who's a senior citizen from Chennai. His query is on Tata Capital. He says that he was allotted 86 shares of Tata Capital at a price of 326, and now it has started to show some momentum, trading just about at 344 currently. He wants to know whether he should hold or sell at the current levels and book the minimum profit that he has right now. What should be the target price that he should look at for a 3 to 6 month perspective? Ajit, what would you suggest? What are the targets that he should be looking at? Tata Capital.
Yeah, good morning, Kanishka. So, see, it's a recent listing. We don't have much data, but based on the available information, since the stock has finally witnessed a decisive move in today's session, means the stock has reclaimed the record highs. The range suggests that maybe closer to around 375, 390 zone is something that the stock might attempt. But since we have limited data, one should keep on reevaluating. The moment we reach to those levels, one can trail stop losses on every rise. So as of now, 335, 330 is the zone basically where we have immediate support. So that should be his stop loss, and he can continue to hold his positions.
Continue to hold Tata Capital. That's the take coming in from Ajit. But then Rajesh, this is a long-term question by Mr. Rishi Mirwani, and he wants to know the potential of 4 stocks. He has invested in IDFC First Bank since last 2 years and recently added Gravitas India, Vidya Wires and Varun Beverages in his portfolio, and he can hold all of these stocks for almost 2 to 3 years and wants to understand the potential.
Can you just repeat the names?
Sure. IDFC First, yeah. Varun Beverages, Vidya Wires and Gravitas India.
Which India?
Gravitas India.
Gravitas India. Okay. Taking one by one.
Sure.
IDFC First Bank, the numbers have been improving in the last 2-3 quarters. But at this point of time, I think the entire fundamentals have been already been discounted in the price. So maximum we envisage is till the levels of 90 odd rupees. So at that levels, I would say book some profits. Varun Brewery is doing very well, not only their Indian operations, but also the international operations, like they have operations in Sri Lanka, Nepal, Bangladesh, and neighboring countries. They're the second largest Pepsi bottler outside US. Recently, they have taken over a company moving into alcoholic beverages too. So fundamentals are very strong. One can add Varun Beverages. Vidya Wires, again, it's doing very good. The numbers have been good. It's a recently listed company with good order book and all. One can continue to hold that. Gravitas try to book profit at higher levels. So they run up quite a lot, and maybe all the numbers have been discounted. So some amount of consolidation might take place in that near future.
Okay, so that's the view on Varun Beverages, Vidya Wires, Gravitas India, and as well as IDFC First Bank. But let's move on and get you another query answer. This is coming from G. Krishnamurthy, who's writing from Chennai. He says that he bought 400 shares of Metro Brands at a price of 495. What should he do now? Should he continue to hold for a longer duration? And so that's the first question that he has. Ajit, let me come to you for this one. And then he's asking, which is the best stock to buy in the year 2026 for a long-term perspective, which could give good returns? So Rajesh, I'll come to you for that. But Ajit, first of all, Metro Brands 495 is his holding price. What would you suggest? What should he do?
So 495 means he has already seen decent like returns on the stock. It's been almost 2 years that he has been holding this without any return. Means the stock has been consolidating in 1050, 1350 band. But comparatively within this space, it's outperforming, no doubt about it. Because considering what we are seeing in Bata India and other footwear related counters, it's comparatively better place. So we feel that one should continue with this position, and 1050 on the closing, this should be his trading stop. The moment we cross 1350 levels decisively next time, probably we are set for the next leg of the up move, which could help the stock to inch towards 1650 or maybe higher.
Tech view on Metro Brands, and Mr. Krishnamurthy is already sitting with considerable amount of profit, more than double for that matter, nearly quite a significant amount for that matter. But Rajesh, coming to you, what is the best stock to buy in 2026? How should we start the year? And he's looking for good returns. Clearly in Metro Brands also he has a considerable amount of profits. Anything on those lines?
See, as recommended in the show sometimes back, I'm going with Reliance and Hyundai, and the third one would be HDFC Bank. The numbers have been good. It's one of the good quality banks. Asset quality has been improving. They're doing very well. And not to forget, we assume that in FY26, the company is going to report around 80,000 odd crores on bottom line. So all in all, it's a good bank to hold. Yes, it has run up quite a lot in the recent past, but still a lot of steam left. So HDFC Bank in the larger names and in the mid-cap banking space, one can go long on Bank of Maharashtra, which have been giving good numbers from the last few quarters, doing very well in all parameters. If you compare with the peer group, it's one of the best bank. The fundraise in the recent past has been able to help the bank in going forward. We have a target of 72 odd rupees in focus. So these are some of the names which one can go long on for for 2026.
HDFC Bank, Bank of Maharashtra on your radar to go along if at all one is looking for an investment. But then Mr. Ramesh from Hyderabad wants a take on Coforge and BEL. He wants to enter these particular counters. Let's take a short-term and a long-term view. Ajit, I'll come to you first. So Coforge and BEL, any specific levels where he can enter or any other recommendation in the same space if he's looking for one?
So Kavita, Coforge has done exceptionally well within the mid-cap IT name, no doubt about it. Means the stock has recently made a new record highs. Today we are seeing a bit of a pressure. It's down by roughly 5.5% after this recent strong move. So this may result in further consolidation or maybe dip towards 1700, 1650 area. So around that area, he can consider going long. At current level, in case if he is considering something in the IT basket, persistent looks comparatively better. Means the stock has formed a fresh buying pivot around its record highs. 6200 is the immediate base. So the moment we cross the 6600 mark, we are set for 7000 plus levels. So persistent is something that he can consider instead of Coforge at current levels.
All right, Rajesh, your take, Coforge and BEL?
BEL is a strong buy. Not only because of the budget play, but because of the kind of order book it has. Government's focus on increasing exports of defense. Even Indian orders are going well. we are bullish on the entire defense pack as such, Bharat Electronics being one of them. And as far as Coforge is concerned, I concur with Ajit's view that at this point of time, Persistent would be a better choice.
The view on BEL as well as Coforge. But with that, time now to slip into a very short break. We'll be right back to answer more of your queries.
On this window, I love this window. That's Air India now.
Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now, and this is a show where we are answering all your stock-specific queries with our experts, and we still have Rajesh and Ajit with us. And let's get back to the queries then. And Ajit, this one is for you. M. Mathivanan has written to us from Chennai. They have 115 shares of Quest Corp. Their buying price is 350 rupees, and 90 shares of Happiest Minds as well. Their buying price is 771. So what would you suggest? What should they do? Should they continue to hold on to both of these counters, and what are the targets that one should look at, say, from a 3 to 6 month perspective?
So Kanishka, Quest Corp, Happiest Mind, both are underperforming in the respective sectors, and what we are seeing that of late Quest Corp is making an attempt of a rebound, but it's not very decisive. Means the volume is missing, so it's very difficult to rely on such kind of reversal attempts. So, in my opinion, if the view is short term, there's no point holding to the losers. Means you can exit both the counters and switch to the sectors which are trading largely in sync with the benchmark trend. So maybe private banks, auto, metals, select stock from the pharma, and even the defense basket is something that one can consider instead of holding to these underperforming counters.
Okay, that's a take coming in from Ajit. But then let's move on. A very interesting question coming in, and I'll be coming to both of you for this. This is Mr. KVS Money from Bangalore. He wants to invest 5 lakhs for 3 years, and he wants a suggestion on 5 best shares that could give him 40% by the end of 3 years. So, all right, Ajit, I'll come to you first. 5 names, what would that be?
So, Kavita, in fact, yesterday we released our New Year picks, and these are the names which would resonate with, even if you are a first-time investor, because we have largely kept the large cap names and select mid-cap names too. And even for the 3-year time horizon, obviously things changes with every passing quarter nowadays, but still we believe that these stocks have potential to do well. So Mahindra and Mahindra, Kotak Bank, Lupin, ICICI Pru, and JK Lakshmi Cement. These are the 5 names which you can consider investing for this year for the overall list of stocks. Average return potential is roughly around 20%. So 40% is quite achievable provided everything goes well in next 3 years.
Perfect. Those are the 5 names from Ajit. Rajesh, what do you have to suggest?
See, 40% or no, I can't say, but I can say that there are some of the fundamental strong names which we have been recommending to our clients. And as discussed, it's one of them is Reliance, that was number 1, HDFC Bank, Hyundai, Larsen, Sun TV. So these are some of the names which we have been recommending to our clients in very long period of time. And even BAC, if it corrects and somebody wants to hold for a long period of time, maybe 2-3 years down the line, I won't be surprised if BAC gives that kind of return. Others also can give a decent return, which we have recommended.
Okay, so very interesting names. From a tech perspective, we have received names like M&M, Kotak Bank, Lupin, JK Lakshmi Cement, and ICICI Prudential Life. And from a funda perspective, we have received RIL and BSE. These are the ones that could give you good returns in the coming year. But let's move on and get another query answer. This is Ramesh writing from Hyderabad. Rajesh is a senior citizen and is a long-term investor. He wants to buy Coforge and BEL. I believe this has already been taken. So let's take another one. This is K. Narsimha Reddy writing from Hyderabad again. AB Capital, is that a good bet for a long term? He already has 300 shares at a price of 221. What would you suggest? Is it a good pick for the long term, and should he add more at the current levels?
It's for me.
Yes, Rajesh, yes, AB Capital.
Okay. See, the entire NBFC space is looking very exciting. If you look at the recent trend, a lot of foreign funds are coming into it, the latest one being Sri Ram Finance. So there might be, going forward, there might be some amount of consolidation or growth coming in from all these companies. As far as Aditya Birla Capital is concerned, it's run up quite a lot in the recent past. But the fact remains, one of the largest company having a lot of businesses under its belt. But at this point of time, I would say adding would not be a recommended choice at this point of time. Maybe a Geo Financial or a Poonawalla would be a better choice.
Okay, that's a take coming in on both these counters. But okay, let's take one question. This is Mr. Somashekar from Bangalore, and again, it's a long-term question. Tata Motors up for an average price of about 820 of 300 shares, and he wants to know if he should be holding on to this particular counter or not. Yeah, it is. He has both TMPV and TMCV. Rajesh, I'll come to you.
See, both of them are doing well, but the way problem is the EV theory which was going on in favor of TMPV is slowing down. But it's better to switch from Tata Motors to maybe a Hyundai or a Bajaj Auto. That would be a better choice. In both the companies, I would say the valuations are on an optimum level, and meaningful upside from these levels looks quite a difficult task. So better choices would be a Hyundai or Bajaj Auto in the four-wheeler and two-wheeler space.
So that's the take on the auto space. You could look at maybe Hyundai or Bajaj Auto. But moving on to the next query, this is from Nitin, who's written to us from Tamil Nadu. Ajit, he wants to know whether he can buy Hexaware, Shakti Pumps and Nalco at the current levels. What would you suggest?
So National Aluminium means metal counters. We all know the kind of euphoric move that most of these counters are experiencing. Nalchan Aluminium, it's also like inching towards its record high with every passing day. Fresh buying, I would recommend to wait because the stock have moved up almost vertically in the last 4-5 trading sessions. So there should be some bit of a consolidation around the current area and maybe a dip towards 285 around that zone where one can consider going long, with 274 as a stop loss and 310 as a position target. Shakti Pump, the stock has rebounded off late sharply with volumes, but still we are not out of woods yet. Means the 800-820 zone is where we have multiple resistances on the long-term basis. So let it surpass this zone decisively, then only you can consider going long. Hexaware, I feel that the prudent approach is to avoid citing its underperformance, and the preference should be given to Persistent or maybe Tech Mahindra.
All right, let's move on and let's take a long-term question, Rajesh. This is on CG Power. Mr. Bhartwaj from Coimbatore has bought this. It's long-term, 3 to 4 years is the time horizon, and he really wants to make the most out of semiconductor manufacturing theme in mind. If not this particular counter, then what other counter in this particular safe space will be good for a long-term buy?
See, for long term, I think CG Power and Tube Investment, these are good long term play for semiconductor. But what I would say at this point of time, semiconductor is a very long story and nothing meaningful is happening at this point of time. So just taking purely on that call would be a little bit of risky. But yes, these are two best play in semiconductor.
Okay, so that's the view on CG Power. Let's get to another question then. Now this one is coming from Vijay Kirti, writing to us from Chennai. They have 100 shares of Root Mobile, bought at a price of 740, and currently they are trading lower. So what's the what is it that they should be doing? Should they book their loss, hold, or average at the current prices? Ajit, what do you suggest? Root Mobile, 740 is the holding price.
So, Kanisha, the stock is still hovering around 52-week low. Of late, there were attempts of recovery, rebound with significant rise in the volumes. But again, we are seeing that the stock is gradually drifting lower. The volumes are absent, which is a good sign. So, from the trading point of view, since he has bought it at very close to the current levels, he can continue to hold his position. But 695 should be strict stop loss, considering the stock's overall underperformance. On the higher side, a level close to around 770, 775 is the area where we have multiple resistance to watch out for. So around that area, he can consider booking profits.
All right, one more short-term query. Ajit, I'll come to you. This is Mr. Khanna from Hyderabad and Central Bank. He's holding 1,000 quantity at 43 and short-term, what's going to be the outlook and a target price if you could want to give him?
So Kavita, it's underperforming within this space. Means if you see that most of the names from the PSU basket, especially the quality names like SBI, Bank of Baroda, Canara Bank, Indian Bank, they have done exceptionally well in the last few months. Canara Bank on the Central Bank on the other hand, it's still struggling around 52-week low. So that clearly shows the kind of underperformance the stock is experiencing, alongside with the counters like IOB, UCO Bank, and some of the other names from the PSU pack. So the prudent approach is to take the losses and switch to SBI, even if you wish to stay with the PSU name.
Look at switching to SBI instead of Central Bank. That's the word coming in. But that was the last query of the day. Thank you, Ajit and Rajesh, for joining us today and helping us answer all of the queries from a fundamental as well as technical perspective. Well, with that, we're completely timed out on this edition of Buy Now, Sell Now. Kavita and I will take your leave, but don't go anywhere. Markets at Noon is coming up next.